So here we are again on EURUSD, daily time frame. So price is really running away from this order block testing right here. It touches it, creates a swing low, displaces higher, really big candles. So yesterday took out a few highs, closes above bearish candles. So for me, therefore, the target is the monthly open or this swing high over here. So bias is definitely bullish, no doubt about it. So let's dive into the 4-hour time frame. As we can see, 4-hour is on the buy side of the curve because the way I see it is we have this original consolidation, then price trades lower, trades back, no risk buy, first stage accumulation, second stage accumulation, and there's the smart money reversal. Also, if you put out a fib from this low to the lowest low, look which confluences we see here. We can see that the 75% level was touched right there, acted as support, we displaced lower, creating this value gap. Very important, respected it, rejected from this level, and also found support at the 50%, like other areas as well. Then we broke strongly below the 50% level, and look how price is reacting to those 50% level. And now it's placing lower, the big displacement through the 25% level. This was news, taking out all this buy side liquidity. Price trades lower, back into a daily PD array, and then closes strongly above these consecutive down close candles. So this now becomes your 4-hour order block. Price trades back into it, making this a propulsion block and trading strongly above it. It uses the 25% level, created an order block right there. Price is respecting that order block and traded higher. The 50, what do we expect at the 50? Usually we expect consolidations at 50. That's not exactly what happens here. It's also creating a value gap at the 50% level. Price trades into it with this wick and price displaces higher. Where to? To the 70% level. By a tick, it touches it. Then it was retracing yesterday and today. And today we traded into the fair value gap, price closing at or just above the consequent encroachment of this 4-hour fair value gap, and price shoots away. So if this is a market maker buy model, then this becomes our target. So again, we are bullish. Let's go to the 15. All right, so today's price action. London was consolidating. Asia was consolidating. Pre-London took out the buy side, took out sell side, took out the buy side, creating a bullish dealing range. So that was today a Judas swing. Price trades lower back into the 4 hours of value gap because that's where price is. If we do below 15 like so. So also, let's also draw out this dealing range. Just before London opens, price takes out the sell side right here. And this is an intermediate term low, right? This one. 50-minute intermediate term low. Why intermediate? Because it has a swing low to the left and a swing low to the right. So therefore that makes this low an intermediate term low. Price trades through it with speed and takes out this FE. So on the lower time frame, this could be a very nice trade. and maybe you would have targeted these highs and price never get there. That can happen, and with just money management, you would have made a very nice trade out of that. Anyways, lunch was consolidating, and just before New York open, it displaced lower. It was respecting the consequent encroachment of the 4-hour fair value gap. It was consolidating, and at the end of New York, price did not touch the low, and then displaced is higher. So that makes this strong indication that price wants to go to higher prices, and also it was a rejection on the 50% level. Price rates higher, making this bearish bullish dealing range. This low takes out this swing low, and obvious it takes out a few swing highs. So this makes it a bullish dealing range. Price trades back to the consequent encroachment into this order block, making this two down close candles a propulsion block, and then price trades higher. So again, I think there are plenty opportunities today. So let's dive into the 1 minute. I'm going to remove the 4-hour fair value gap because that is the scene we're trading in today. Now you have a bit more clean chart. So this was this intermediate term low that I would have been watching when London opens. So just before London opens, it consolidates a bit, and then it takes up its speed, and it takes out this high. So that could immediately be a trade for me, because it fits all the criteria that ICT states. It takes out liquidity with speed, breaking a high, and it is leaving fair value gaps. So I would enter a market order here, stop loss below this low, and the target for me would be those equal highs, because for me on the low time frames, this is a market maker buy model, sell side of the curve, original consolidation. So, and this also very nice 1.95. So that would be a very nice trade. I always aim for the highest body. I don't do wicks as my TPs, so it always would be M1, and maybe I would round it up to a 1 to 2 to just be, so that's nice. But anyways, as you can see, this would be a very nice first trade. Next, what we see is, if we go back to the 15, that would also be a very nice trade. Like here. So what we also see here is I'm going to use this one. It is an intermediate term high. Why? Because it has this swing high to the right, left, and this swing high to the left of it, making this an intermediate term high. And this high, together with this high, are also forming equal highs. So therefore, I would also mark out this high and call this a equal high, like so. So going back to the 1 minute, because that's what I'm watching. So I see this 15-minute intermediate amount taken out, but there's no displacement lower. Price goes up higher, no displacement lower, only until here. Now price is displacing lower. I'm going to remove this one because this was a higher price, so price takes it out, then comes down with speed. So what do we now need? We need fair value gaps, we got it. We need the buy side taken, we got that too. But now we need a swing low taken, and this is the first swing low that I see in this entire leg. So this low right here gets taken with speed, and so therefore that could be a short position from here to, now when you put your stop, the safe stop would be here, and since I'm still learning, my stop would be there. It's only 8 pips, it's not much. Where would my target be? Well, original consolidation, low risk buy, first accumulation, second, etc. So I would say I would target this low right there, and eventually it would be hit during lunch. So that is a second trade that you could have been taken with the 2022 model. Then this, I'm going to remove this, like this. I would mark out London low because that is a significant price area. London low. So in lunch we touch it, acting, if you want to see that like this, as support, trades higher, gets rejected from the midnight opening price, price stays lower, it's taking our sell side, buy side everywhere, so kind of ranging and sloppy price action. Then once it's breaking down with speed, price trades back to it. You could also trade this, but remember that we are in a now trading, and let's pull that show that once again. We're trading in a bullish. Yes, that's fine. Where price is now trading inside a bullish 4-hour value gap. So yes, this may seem like very nice shorts, but price is inside a 4-hour value gap, so you would expect price to get higher. And also we are the buy side of the curve of a 4-hour time frame. So yes, these are very beautiful shorts, but I wouldn't trade it. I would wait for buy side to get, for sell side to get taken. So I would mark out this low. Well, yeah, this low got taken, but we don't see much of speed. So therefore, I would change to this low. And this low is a 50% mark of the dealing range. So that's significant, that's nice. So there's a low sitting at the 50% of the dealing range. Which dealing range was it again? This dealing range from this low to this high. Inside is 4-hour value gap. So when zooming in again, this low touches that 50% level, gets taken out with speed, and now gets back with speed, taking out a swing high. So I would long this, but I wouldn't get filled. Then I would think I would have removed my order, since those candles are just going higher, creating a down close candle, and you want down close candles to see a supporting price. Then this high gets taken out, also with speed, leaving a value gap. So then I would have longed this value gap right there. Stop loss below this low. Well, I don't have to set and determine my target because obviously this would have been a loss. So okay, that's really a loss, no issue, can happen. Then I would mark out this low, since price stopped me out. Then price trades below this low, leaving a small portion open of this bullish value gap. Then again we see displacement higher, closing above this low it just took. So that's nice, creating a strong value gap. So I would again long it, because also we have a strong close above this swing high. And this time I have a very small stop loss. Maybe I would have used this as my stop loss, and a few ticks below, something like this. And since we are in a 4-hour bullish value gap with a very lethargic run to the downside, my target would be at least to this rejection block resting right here. So at least this 1 to 5. And if I now would go to the higher time frame, to the 50-minute, we enter here. And then I would say those are very nice looking equal highs. So I would target these areas, or maybe I would have targeted this right here, being a rejection block and also equal highs. So maybe I would have taken out most of my position, but ideally I would have targeted this high right there, leaving it to a 1 to 6, which is a very nice risk-reward ratio. So yeah, I think that, yeah, indeed, yeah. And the target would be also pretty fast, I guess. Let's see how much time it would have taken. Yeah, over 2 hours, but still for a 1 to 7, almost 1 to 7. That's a very nice trade. Then the other pattern, the dealing range pattern, is now we have a new bullish dealing range, right? From this low to this high. I'm going to remove all this stuff. It's more cleaner. So a very strong push higher at the end of the New York. Price came back to the 50% level, touching this order block, and a low high. That is swing low, swing high, low, low, high. So this area, this thing right here, would be a breaker. Or maybe you want to use all of it. Not sure how, maybe high time frame breaker. But anyways, there's a breaker inside here. Price trading back into the breaker that's resting here. And what you then look for, basically a shift in the institutional order flow. So at this moment, order flow is bearish. Then you wait. You just wait. Price touches the 50%. That's a good sign. So price trades back to equilibrium, to fair price. And next, what happened? Price created this fair value gap. Price trades into it. And if you're truly bearish, it would just place lower from here. Price did not do that. Instead, price trades higher, fills the bearish fair value gap, trades lower, and price is respecting down close candles, except for this one. So as soon as price is trading above this candle right here, you have a chasing state of delivery, maybe earlier, but anyways, that could be a long also, and price spaces higher, also above the 25 level. My stop would be just below this low right here, and yeah, pick your target. I would say it would also be a winner. Oh no, it wouldn't be a winner. It would have been possible to get stopped out right there, and then the real move came. So depending on where you would have placed your stops, but you definitely should have taken a partial maybe from this. I don't know. Maybe this was just a loss in trading this way. Just depending on where you put up your stop loss, because there are lows just above a fair value gap. So maybe you want to take this fair value gap into consideration. Then you would have been safe. And already you still have a 10 pip stop loss. Yeah, so maybe you also got being cautious because there's a 3 drive forming. There's no really displacement moves higher. Yeah, those are displacement moves, but still not like this. This is what you want to see. Anyways, so that's it for today. There would be there were very nice trading opportunities. So hope you catch one. See you in the next time.